something for you to consider. When is the best time to do a day trade? It's when the odds are in your favor. It's not when you see news events happening. It's not when you see crazy market action. It's when you have the odds in your favor. So let's say today is Friday. Let's take a look. Options expire at the end of today. The ones that are set to expire today, that is. Now, if you sell a 27.95 call in the S&P, and your job and your goal is to get short the S&P anyway. You want to sell short the S&P. You think we've been overbought for 6 weeks and you think now is a good time to sell. Consider this. Sell something that will go to zero at the end of the day today. So here we have a chart of the intraday happenings of what happened on Friday, March 1st, 2019. What we had is a push up from the open and we hit about 28.07 and change. Now let's say hypothetically I wanted to get short the S&P 500. Why don't I go ahead and sell a 27.95 call, take in, let's say hypothetically, 12.5 points. 12.5 points per contract, and that guarantees that by the end of the day, if the S&P is at 27.95 or above, I will be short at 28.07 and a half. I gotta do the quick math here. Or if the market goes below 27.95, which is just barely 0.5% below where I sold that call, all of that 12.5 points is mine. So consider this. We sell some 12.5 point calls when the market is around the high of the day. We don't know if it's going to be the high of the day or not. We're just selling in that premium. Because if the market falls from here, that call that we sold, that we got 12.5 points for, that's going to get decimated really quick. So what we do in this case is we say, okay, my number one concern is to be short the S&P. I don't care what happens. I will get short at 28.07 and a half. That's my game plan. Now, the cool thing is if the market goes to the downside, that call that I sold, I can now buy back. What I sold for 12.5 points, I can now buy back for 3 points or 2 points. 1 point equals $50. So you can do the math. You can see, okay, this makes sense to do here. Now, the reason that has fallen so fast is because there is almost no time left to this option. So it's almost mirroring the market. So what I can do at this point is what I sold for 12.5, why don't I go ahead and get flat, buy back at 2, why don't I get long at 2, just in case the market wants to run back up for the rest of the day. In effect, what I sold for 12.5, bought back for 2, I have 10.5 points of profit. Why don't I buy 3 of these for 6 points? It's a free trade. Now I buy these back for 2 points each, and the market starts to rise towards the end of the day. I'm selling this thing at 4, at 6, and at the end of the day, guess what I do? I roll over to the next options expiry, which is Monday or Wednesday, and then I sell premium out there. But not only that, I only leave one winner for the rest of the day, just in case this market wants to take stops to the upside. That is one of the best ways to do a day trade because the odds are in your favor and you don't care which way the market goes. Your game plan is already set. You're not worried about time decay eating you up because that's a free trade. Guys, this is very, very important because not only does it force you, because when you sell options, it forces you to use an account that is very well capitalized, 1. 2, don't buy a lot of near-term premium if it hasn't been paid for. It's always best to sell something that is going to go into your pocket. Use that profit for your maneuverings thereafter. Leave any questions or comments below and I'll talk to you soon. Take care, guys.